Welcome everyone, this is John Sheely of the Traders Country Club. This is our video of the day, but remember the trading of stocks and commodities does involve substantial risk of loss. You are looking at a TradeStation chart of April gold futures of 1980. And the reason I'm showing you this is that this is what a bull market does in regards to inflation. You can see the amount of fear that occurred during the late 79 period. In a way, this is what inflation looks like, of course, of the physical commodities. And as you know, there's been a great deal of discussion about inflation. Let me show you a different chart that will actually be the lead indicator to let you know when inflation truly is a concern on a worldwide basis. You are now looking at the March 1980 Treasury bond, 30-year bond futures. Look what was going on. As you know, interest rates at that particular time were skyrocketing. That means the bonds would be dropping in value, and you can see the dramatic fall that occurred from late 79 and 80. This is what you will see when bonds illustrates what the entire world is doing to interest rates if inflation is a real problem. Because if inflation starts to appear, then the demand for higher and higher rates of interest is also going to occur. If you have 20% inflation or 10% inflation, then you're going to demand higher and higher interest rate return for the loaning of your money. That means interest rates would begin to spike. That is what this is showing you. Interest rates were spiking because there was a greater and greater demand to be paid a higher and higher interest rate. Now let's look at the current Treasury bond market and see if we see the same kind of fear occurring. Here we're taking a look at the March bonds, but in a continuous contract. We'll discuss that on another lesson, but in this particular point, what I'm illustrating is the 30-year bond and their current pricing behavior. You can see that other than this short period of time in which there was a sell-off, in which that's when the gold was beginning to really rally, and as well as the oil from the March lows. But in regards to the activity for now several months, we're not getting a spike in interest rates. We're not getting the bond market to collapse. And that is because at the moment, the fear of inflation worldwide is not of primary focus. So just keep that in mind. If you want to know if inflation and the fear of inflation is beginning to take hold, what you will take a look at is the bond futures market. They're going to tell you if inflation is out of control, these bond prices will begin to drop, just as they did in late 79 and 1980. The point of this video of the day is we don't have that in the bond market, and they indeed will be the main instrument to watch to let you know when inflation is a real problem. This is John Sheely, the Traders Country Club.